When hardship filled the headlines and uncertainty reached into nearly every home, Moody Radio kept proclaiming the unstoppable gospel. Hi, I'm Rob West. Today, we're continuing to look back at Moody Radio's impact as part of its year-long centennial celebration. For 100 years, these microphones have carried biblical truth into everyday life, including through the Great Depression and World War II. Then we'll take your calls at 800-525-7000. That's 800-525-7000. This is Faith and Finance Live, biblical wisdom for your financial decisions. In the 1930s, families were stretching every dollar. Jobs were hard to find. Savings had disappeared for many. And yet, in living rooms across the country, people gathered around the radio to hear news, music, encouragement, and through Moody Radio, the steady reminder that God had not changed. The stock market crash of 1929 sent shockwaves across the nation, including Chicago. By 1933, unemployment had climbed above 25%, with about 13 million Americans out of work. Between 1930 and 1933, roughly 9,000 U.S. banks suspended operations, wiping out millions of savings accounts. Industrial output fell sharply, foreclosures rose, and breadlines became a painful picture of the times. In that climate, radio became more than entertainment. It became a source of connection, information, and comfort. And for many listeners, WWII, the flagship station of Moody Radio, became a trusted voice pointing them back to Scripture. While commercial stations struggled, WWII remained steady. Years of careful stewardship had provided dependable equipment, a committed staff, and modest reserves. And that stability wasn't something to protect for its own sake. It became a way to serve. One of the most moving examples came through Letter Week, when listeners were invited to share how God was using the station. No one asked for money, but envelopes began to arrive, some with nickels taped inside, others with a single folded bill. In 1933, one little girl sent a note that deeply touched the Moody staff. She wrote, "I wish I had money to send to keep you on the air, but my daddy has had no position for 3 years. I got this $1 for Christmas to spend for presents, but I want you to have it." Her gift may have been small in dollars, but it was great in faith, a reminder that generosity is measured not by the amount, but by surrender. WMBI's faithfulness also encouraged others to consider what Christian radio could become. Pastors, Bible school alumni, and ministry leaders wrote to Moody for help and guidance. By the eve of World War II, several fledgling Christian stations were on the air, many influenced by Moody graduates. Meanwhile, American households were learning new habits of thrift and sacrifice. Savings had largely vanished for many families during the Depression, but by the late 1930s, small deposits began to return. When war came, many redirected those savings into war bonds. Works Progress Administration crews also put millions of Americans to work, a reminder that purposeful labor provides not only income, but dignity. Then came December 7th, 1941. The attack on Pearl Harbor changed the nation overnight. The next day, uniformed policemen filled WMBI's corridors, while engineers arranged to share a news feed with WGN and the Mutual Broadcasting Network, allowing President Franklin D. Roosevelt's Day of Infamy address to air live. That news feed continued throughout the war, and Moody Monthly recorded 440 government programs and announcements in a single month of 1942. With so many young men drafted, women stepped into vital roles behind control boards and microphones, reflecting what was happening across the country as women entered factories and offices. Moody's female engineers helped keep the station on the air and reminded listeners that God equips His people to serve in every season. On the home front, sacrifice was measured in ration books and careful planning. Rationing began with sugar in 1942 and soon included coffee, meat, gasoline, and shoes. Victory gardens filled millions of yards, and war bond drives invited families to save and give with a purpose beyond themselves. Through it all, Moody Radio used its airtime to bring comfort and clarity. As we celebrate 100 years of Moody Radio, we remember more than a broadcasting milestone. We remember the faithfulness of God through ordinary people, careful stewardship, sacrificial generosity, and the steady proclamation of God's Word. All right, we're going to take a quick break. When we come back, we'll take your phone calls. That number, 800-525-7000. Stay with us. We'll be right back.
The opinions offered during this program represent the personal or professional opinions of the participants, given for informational purposes only. Any information provided is not intended to replace advice from a financial, medical, legal, or other professional who understands your specific situation.
Great to have you with us today on Faith and Finance Live. I'm Rob Westwell. Our lines are open, so this would be a great time for you to call. The number is 800-525-7000. Why would you call? Well, we're here to tackle your financial questions today, help you think about how you would manage money in light of biblical wisdom. Again, that number to call, 800-525-7000. We're going to dive into those questions here in just a moment, but go ahead and get your call in the queue, 800-525-7000. In the news today, buy now, pay later loans are increasingly being used for necessities, not just discretionary purchases, as households faced higher living costs. Buy now, pay later providers issued an estimated $157 billion in consumer credit in 2025. That was up $116 billion from 2024. LendingTree reports that 44% of Americans expect to use buy now, pay later within 6 months. Some consumers turn to these loans after exhausting their credit cards. Surveys show others are using the loans for groceries, rent, utilities, medical care, car repairs. I'm even seeing them for a food delivery. Can you imagine? The convenience can carry serious risks. Nearly half of these buy now, pay later users reported making a late payment in the last year. While many plans charge no interest, many do include interest, financing charges, repeated late payments, and fees. Borrowers may find that several small payments quickly become difficult to manage. That creates an ongoing cycle of debt. Be on your guard here. This is becoming normal, unfortunately. And listen, if you're needing to use buy now, pay later to make the purchase, it's a telltale sign that you need to slow down, stop, wait, save, and buy with cash. Be careful. This is becoming all too common. All right, let's dive into your questions today. Here's the number, 800-525-7000. You can call right now. Let's go to Alabama. Gene, how can I help?
I wonder how I could get the name of a debt consolidation company, a good Christian company, or a way to reduce a large payment.
Yeah, I'd be happy to help with that, Gene. And the one I'm going to give you actually has Christian in the name. It's Christian Credit Counselors. We've been partnered with Christian Credit Counselors for more than a decade now. They've worked with thousands of our listeners. They're wonderful people. In fact, I talked to Neely Simon, who is one of the key on the executive team there at Christian Credit Counselors just earlier today. And they're working, unfortunately, I'll say, with more and more people. Just credit card debt seems to be running rampant now as costs are up, and it's just creating a real problem. However, they really feel that they've been called to this moment, and these are wonderful folks that want to come alongside God's people. And the reason that this is my preferred way to pay off debt is it doesn't require a new loan to roll up the debt with a new lender. It stays right where it is, but you enjoy two things. Number one is a level monthly payment, usually slightly lower than what you're paying right now on a minimum payment, but with a reduced interest rate. So whereas the average interest rate sitting today around 23%, the typical in credit counseling is between 0 and 10. Now, it's ultimately going to depend on which creditors you're with in terms of which interest rate you get. But your first step is to head to Christian, well, the better website is faithfi.com/CCC. That's faithfi.com/CCC. And you can get an appointment virtually to connect over the phone. They'll walk you through all the details. And on average, you'll pay it off 80% faster with this approach. Does that help, though, Gene?
Yes. Do you have a phone number for them?
I do, yes. I'd be happy to help with that because I know it's often a lot easier just to pick up the phone and call. And that number is 800-557-1985. 800-557-1985.
Okay, that sounds great. Thank you so much.
Okay, you're welcome, Gene. Call anytime. Lord bless you. Let's go to Spring Hill, Florida, and welcome Rich to the broadcast. Go ahead, sir.
Hi, Rob. Thanks for taking my call.
Yes, absolutely.
Hey, my question is, I'm about to turn 69, and I'm trying to hold out till I'm 70 to collect my Social Security so that I get the maximum Social Security. If I'm able to, I might continue to work because I'm a little worried about being bored after I retired. So if I continue to work, does that mean that my Social Security will gradually increase, or do I stop paying Social Security after 70?
Yeah, you don't ever stop paying into Social Security. If you're working, you're going to have those FICA taxes regardless of your age. It's just the way the system works. And there is no reason to continue to delay beyond age 70 because that 8% increase that you're going to get every year beyond full retirement age stops accruing once you reach age 70. So you're just leaving money on the table if you don't start collecting. So you would not want to wait past age 70 to collect. But if you continue to work, and I love what you're saying about, listen, I love working, and I'm not sure I would want to stop unless God redirects me to something else that allows me to be productive in a different way. You are still going to pay the FICA taxes.
Okay, so if I continue to work but I do collect my Social Security at 70, the money that I contribute after I turn 70 and continue to work, does that make my Social Security increase a little bit more?
Maybe. And here's the way that would happen. If you earn in any given year at any time, including beyond age 70, more earnings in that year than any of your high 35. So remember, you've got to have 40 quarters or 10 years of paying into the system to qualify. And your check is based on your highest 35 years of earnings. And so if by continuing to work, the total wages you had in any given year, if it replaced any of your high 35, then that would result in them recalculating your benefit and it would increase. And then the cost of living adjustments are going to happen regardless of whether you're working or not. So that would be the only way you would get a larger check as a result of working is if you knock off one of the lower years.
Great. And a real quick second question.
Yeah.
Who do I need to contact or to see to help me create a budget? Because I must be overspending because every couple months I have to withdraw some money out of my savings to make my checking even.
Yeah.
When it black.
Yeah. Yeah. Very good. Yeah, we have a team of what are called certified Christian financial counselors here, Rich, at FaithFi, and I'd be happy to provide one of those to you to work with you on a couple of sessions. If you decide you want to continue beyond that and you need some ongoing assistance, you would then work out, what those payments would be for each session. It would be fairly nominal, but at least for those first couple of sessions, just to get you pointed in the right direction, help you understand the mechanics of setting up a spending plan, whether it's a paper system or in the FaithFi app, they're trained to do that, and we'd be happy to provide that complimentary. Does that sound good?
That sounds great. Thank you.
Okay, absolutely, Rich. Hang on the line. The team will get your information, and we'll get somebody in touch with you. Thanks for calling today. Well, we're going to take a break. When we come back, more of your questions. We've got some great ones holding, plus room for you. 800-525-7000. Call right now. We'll be right back. Hey, thanks for joining us today on Faith and Finance Live. Hey, if you love the program, you'd like to become a partner. That's those that support us monthly at $35 a month or annually at $400 or more per year. They're a key part of making this ministry possible. Our partners, simply, we couldn't do this without them. And as a way of saying thanks, partners receive in the mail 4 issues of our magazine, Faithful Steward, all of our new studies and devotionals, our field guides mailed to your door, pro access to the FaithFi app, and a ministry update from me each quarter to celebrate God's activity here in the ministry. If you'd like to learn more or contribute today, we'd certainly be grateful. Just head to faithfi.com/give. That's faithfi.com/give. All right, we're going to head back to the phones. Let's head to Illinois. Scott, go ahead.
Hi. I'm going to try and speak fast because this is like over 10 years in the making. But we are trying to buy our house that we've been renting, and the landlord is willing to sell to us for a pretty good price. My biggest question was, it was more of a worldly thing, but I had on my heart that I wanted to save 50% of this house to put down. And so we had some medical bills, and we're at about 25% now. And the Spirit is, putting on my heart that we should buy now. And so since we've been renting, I'm trying to find out, we don't really need a realtor, but we do need something like a lawyer or a realtor to do things like the deeds and stuff. And so I really needed a hold of some advisors, at least a couple from here.
Yeah. Well, I appreciate that. And, I congrats on your new career and that job change. In terms of where you go from here, I would say, number one, don't deplete your cash reserves. Especially after a career change, it's wise to maintain a healthy emergency fund in case your income is less predictable than expected. I would consider the interest rate here, Scott. If you're getting a competitive mortgage rate, it may make sense to put down less than 50% and keep more cash available. If the rate is high, putting more down could reduce your monthly payment and total interest costs. We're on the higher end of what we've experienced the last 10 or 20 years, but we're probably pretty more typical to what, the industry has looked like for the last 50 years or so. And then you always want to look at your whole financial picture. The right down payment balances affordable monthly payments with maintaining liquidity. Now, we certainly want to try to pay it off over time, but this idea that you would try to, preserve adequate reserves is a big idea. In terms of who you'd want to connect with, in terms of the purchase itself, I think just finding a godly real estate professional would be, really important. And then they would work either with an attorney or a title company on the closing. But that real estate professional is really the quarterback for helping you in terms of finding that appropriate home, helping you negotiate and buy, and then dealing with all of the contracts and so forth. So I would probably ask at your local church. You certainly could call a certified Kingdom advisor and ask for a referral, but we don't have CKs in the realtor field, so there wouldn't be any direct contacts you could make through FaithFi. You would have to ask for a referral. But I think that person that is familiar with your area, preferably shares your values, who's got good experience, could be invaluable in this process of, just determining what house to buy, what you can afford, where, and then, ultimately how much to put down. I hope that helps. It sounds like you're headed in the right direction here, Scott, and if we can help further, don't hesitate to reach out. Thanks for being on the program, sir. Let's go to Indianapolis. Matthew, go ahead.
Yeah, thanks, Rob. My question is, I'm 39 years old. I have about $100,000 in an ESOP account that's going to be paid out next year in 2027. My wife and I have about $60,000 in debt. The question is, is it wise to pay off the debt with that ESOP money that's being paid out, or roll that into my 401k?
Yeah. And what type of debt do you have? The $60,000.
It's a couple credit cards and some tax debt.
Okay. And are you still accumulating the credit card debt?
No.
Okay. Was that like a single event, or was that just gradual, lifestyle spending beyond your means? Where did that come from?
Yeah, it was prior to our marriage, and then just spending on some things that we probably didn't need to prior to marriage, and then also some marriage debt too when we had our wedding.
Okay. Yeah. Yeah. I mean, the priority order there would be, I would say, is the IRS debt first, especially if you're accruing penalties and interest, then the high interest credit card debt, especially if it's double digit interest, and then maintain an adequate emergency fund so you don't ever go back there. And then if there's money left over, then that would be where, you would look at perhaps rolling the eligible portion into your 401k or another qualified retirement account. But I would confirm that, in fact, that is eligible for a rollover. I suspect you've already done that, given that you mentioned that option. You also do want to know the tax consequences. So you're just going to want to probably talk to your plan administrator or your CPA before making decisions, especially on anything you're pulling out, so that doesn't catch you by surprise. But, ultimately, getting the IRS paid back and then getting that credit card debt eliminated. Now, if you can fund the credit card debt on a relatively, short period of time out of current cash flow, I'd love to hang on to as much of this retirement account as possible for your future, especially because it's in a tax-deferred environment and it's not easy to get money in there. But that IRS debt, seems like something, unless you're on a payment plan and you're making good progress, that would often come first for me. So that's my pecking order. I think some of the things to consider there as you're thinking about it. Big idea, we want to get out of debt quickly. And as long as you've got a plan to do that, I'd like to preserve as much of this as we can. But anything that's considering to accrue high interest, let's wipe it out. Thanks for your call. We'll be right back. Thanks for joining us today on Faith and Finance Live. I'm Rob West. We're taking your calls and questions today at 800-525-7000. Again, that number, 800-525-7000. We've got some lines open today. Let's head to Tennessee. Victor, how can I help?
Hey, Rob, I appreciate you taking the call. My son and daughter-in-law have got a car payment that's just overly inflated, and I was just curious if, like, Christian credit counselors, or if there was another way to sort of bring down the interest, because they had bad credit before they got the car, but they had to have the car. My son joined the military, and he needed a car to drive across the country. So
yes. Yeah, I know that can be challenging. That's one of the big three budget busters: housing, cars, and food. Food's a little easier to remedy. Houses really difficult. Cars can certainly be difficult as well. Is he upside down on this, or are they just struggling to make the payments?
Well, so now that he's in the military, the money's okay. They live on base. They have base housing and so on. But obviously they're still stuck with this car payment because they bought the vehicle. So it's $900 and something a month, and I'm pretty sure the interest is like way overly inflated because, like I said, they had not great credit when they got it, but he had to have a vehicle to get him across the country, so to his duty station. So I didn't know if there was a way to, get the interest down, sort of like they do with credit cards. I didn't know if there was something for auto loans like that.
Yeah, it's a good question. No, there really isn't. I mean, Christian Credit Counselors helps people to unsecured debt, and the benefit is that these credit card companies all have a credit counseling department. So it's an official program that's in place. They all have their credit counseling rate. So as long as you go through a nonprofit credit counseling agency, they'll slide you into credit counseling. The card gets closed, but you do then enjoy the lower interest rates as long as you pay through the nonprofit. That is not available for secured loans in the same way. So unfortunately, that option doesn't exist. Typically what you would do is just, call the lender. You certainly, if you're going to miss a payment, you don't want to wait. You want to ask whether they have a hardship assistance program or temporary payment reduction or loan modification. that's not really helping necessarily. It's just kind of kicking the can down the road. You could look to refinance. You could, of course, sell the vehicle if it's worth enough to pay off the loan and then, just be out from under it, purchase something less expensive. If you're upside down, you can talk to the lender about your options. Sometimes they'll help you with that. But you always want to start with the budget, so we don't get back into another bad situation. But unfortunately, there's not kind of a program you can slide into that would address the interest rates in the same way that you have available with credit cards.
Yeah. I wasn't sure. Like I said, they're okay as far as the money situation. I just hate seeing them pay all this money onto this car that, they're sort of stuck with. I mean, I guess they could, again, try to sell it or whatever, but they sort of need it. And under the circumstances, I just didn't want them to keep chucking money at this thing if they could get, a better offer another way, but outside of, I guess refinancing. But they talked to the lender on that, and the only real refinance on that, it's not really so much a dropping of the interest, it's just changing the length of the loan so that it just changes for longer. It lowers your monthly bill, but you're just still paying the money just over a longer period of time. That's
which means you pay more interest in the long run.
Yeah.
So that's definitely not solving the problem. Yeah, unfortunately, I think you just got to chalk this up to a learning experience and let them just ride this out, pay it off as quick as they can, and try to move on and remedy the situation in the future. Hopefully they can, keep making this payment to themselves once this is paid off, become their own bank and buy with cash in the future. But there's not any kind of quick fix there for sure. Hey, we appreciate your call. You sound like a great dad, Victor. I wish I had a better solution for you, but I think this is about the best you can do. Hey, stay on the line. I'm going to send you a copy of Ron Blue's book, Master Your Money, to pass along to your son and daughter-in-law. It was a game changer for me coming out of college, and this could be a key learning opportunity for them to understand God's way of handling money. Again, it's called Master Your Money, and we'll send it as our gift. So just hang right there. Thanks for being on the program today. Let's go to Illinois. Tanya, how can I help?
How you doing, Mr. West?
I'm great. Thank you.
Yes, sir. I just have two quick questions. One is, what is the upside downside of having an authorized user on your credit card accounts? I'm speaking of my son. I kind of know the answer, some of the answer, but I want to hear your version. And then the second one is this new thing that has come out, at least for me, with the American Express logo being attached to like certain credit cards, upscale credit cards like the Hilton, Macy's. Do you need to have an American Express card if you have those type of cards with the American Express logo? How does that fit into the equation of just overall? What is the point of it with Macy's having with the American Express logo? Now that's something new where you can use Macy's card anywhere, or let's say the Hilton, you can use it anywhere. Can you explain that a little bit? And you can disconnect me and answer my question.
Okay, thanks for your call today. Let's tackle that first one with regard to authorized users. Because, this is a strategy folks will use, especially to help somebody build credit, like maybe a child who's just coming out of college, just getting started. You can add somebody to your account as an authorized user, even if they don't have access to the card, and they inherit all of your credit history. And assuming it's good, then, it will help them build credit much quicker because they get the benefit of your longstanding history, your on-time payments, all of those things, which can kind of shortcut that process is what I meant to say. What are the downsides? Well, your credit can be affected because if you're an authorized user and the primary cardholder misses a payment or carries a high balance above 30% of the limit, or somehow damages the account, that activity is going to flow through to the authorized user's credit report. So, that good credit history is going to come through along with the bad. And so you just, often folks will go into it with the best intentions. Then all of a sudden their balance starts creeping up. And now all of a sudden, it's maybe it's only one card on their account, and it's over the limit or the threshold of 30%, and it's going to do more damage to that authorized user than someone else who's got multiple cards. And when you factor this into the other available credit they have, it's not that significant. I would say, trust is essential because if that authorized user has access to the card, they can run up that debt. So that's key. And, those are pretty much the main issues. I would say maybe the third is if you're planning to do this only because you want to get the good credit history and build your credit, make sure your particular creditor does share that data with authorized users. Not all do. And so that may defeat the purpose. So those would be the main issues, primarily just that negative information is going to come over along with the positive. All right, we're going to take a break. When we come back, I'll get to part 2 of your question related to branded retail cards with the Amex logo. And then we'll get to a few more calls here in our final segment. Catherine, Cynthia, Gordon coming your way. We'll be right back. Celebrating 100 years of Moody Radio. How incredible. We had an opportunity to celebrate that here at the open of the program today. It's continuing all month long. What an opportunity for you to step in if you love Moody Radio and continue to fund the future, the next 100 years of Moody Radio, which is going to include Moody Global Media and this strategic shift to delivering on-demand, multi-format content, audio, video, text, rather than relying solely on radio, but with a focus on a digital-first expansion to meet audiences where they consume content today, sharing the unstoppable gospel of Jesus Christ in all kinds of mediums. That's what's happening through this content expansion, enhanced programming. We're seeing just incredible engagement. I mean, take Open Line with Michael Rydelnik. Being able to use video and seeing over 1.6 million people view that content in 6 months on digital platforms is the kind of engagement we're looking at here. And if you'd like to be a part of the future of Moody, moving beyond Moody Radio into Moody Global Media, what a great opportunity for you to step in. Our team at Moody Stewardship would love to talk to you about how you could be a part of that. And one way to do that is through an IRA qualified charitable distribution. You know, if you're 70 and a half or older and you've got an IRA, you can make a gift direct to the Moody Bible Institute straight from your IRA. And here's the thing that happens. That money is never taxed. You know, it went in pre-tax. Now it comes out without paying tax, going right into Moody, and is then a part of spreading the gospel. And you're able to do more than you would have done otherwise because there's no tax involved. If you'd like to know more about what that looks like and talk to somebody who can help you make that kind of gift, just head over to moodystewardship.org. There's an amazing team there that would love to chat with you and serve you. Again, be a part of the next 100 years of Moody Global Media. Just go to moodystewardship.org to learn more. All right, let's head back to the phones. Actually, Tanya asked a second question that's a good one that I want to tackle quickly. She's staying on the line to listen. And she was wondering about, these branded retail cards that can come out, and a lot of folks are seeing these. And, I think what you need to understand there is that, all kinds of retailers are looking at opportunities to find new revenue. And one of the ways they do that is through these Amex cards. And whether they use Visa or Amex, it's just a way for these cards to, have more purchases taking place. I wouldn't get caught up in, whether it's Amex or Visa. I think the main thing is only use credit cards for budgeted items and pay it off in full. And I would get out of that trap of any time somebody offers you a card, even if there's 10% attached to it as a discount. The problem is you can just rack up a lot of these cards. It affects your credit, and it's just tempting to spend money that you wouldn't otherwise spend. So I would say, Tanya, although, yes, this is more common, I would avoid you taking on more and more of these cards, especially if there's annual fees attached to them. Just stay focused on one card that you're going to use for, again, budgeted items and pay it off in full. Hey, thanks for your call today. We appreciate you being on the program. Catherine is also in Illinois. Go ahead.
Hi, Rob. Thank you for taking my call. I have been working as an elementary teacher, and I'm trying to supplement my salary. So someone introduced me to selling insurance, and so I went ahead and started and got a license in life and health. And I'm asking you whether I could go with the company that my friend invited me, which is WFG, or what would be the best way to use this license on a part-time basis?
Yeah. Yeah, it's a great question, Catherine. And, I think being licensed to sell life and health insurance can be rewarding. If you like helping people, if you're inclined to just the way God has wired you to networking and talking to a lot of people and then really serving them well and trying to help them in a really important area, and that is to protect their families and offset a significant risk that exists. I would carefully evaluate the company you're going with, also how you're compensated, and whether the business model aligns with your values and personality type as well. The benefits to just selling life and health insurance is, you've got flexible work hours and supplemental or full-time income. You can help people with important protection. It can be a pathway into the broader financial services industry. And I think if you can build a strong client and referral base, you can see compensation that grows. But it's commission-based, which means it's unpredictable. And, especially early on, and it can take time and persistence. And then I think you need to look carefully at the company you're working with, because a lot of times, and I'm not surprised that you were invited into this by a friend, because that's really the business model of the company you mentioned and many other like them. They're not doing anything wrong, but it's more of a multi-level marketing structure, which just means you not only earn from selling products, but also from recruiting and developing other agents. And, it's important to understand that where is the emphasis for the company? Is the emphasis on recruiting more representatives, or is the emphasis on serving clients well, both in terms of the quality of the product and the pricing? And I think if you want to go into selling insurance, that's great. Again, it can be rewarding and flexible, and you can make some money if you stick at it for a while. But I would make sure that you're partnering with that company that really wants to serve people well with a competitive product. And perhaps you ought to look at an independent insurance agency that doesn't have a model built on you recruiting more representatives, and perhaps is more of what's called a captive insurance agent that you feel aligned with in terms of your values. So that would be my advice. Again, nothing wrong with this industry, but I might look around in terms of making sure you find the right fit before you commit to one particular company. Thanks for calling, Catherine. I hope that helps. Let's go to West Palm Beach. Cynthia, how can I help?
Hi, good afternoon. I have a quick question, and I don't want to take up too much of the time. About 4 months ago, I received an invitation from what I thought was a trusted online banking institution, an invitation to open a new savings account with them and earn a cash bonus if I left the funds there for 90 days. Okay? Fast forward, it's 4 months now. I left it in there for more than 90 days just to make certain that I qualified. I'm being told now that I didn't do something. I was supposed to enroll in the promotion. Well, the invitation only said make the deposit by a given date and leave it there for 90 days. There were no other instructions in my invitation. So I don't understand why they're refusing. Can I call the name of the institution, or you don't want me to do that?
It doesn't matter. I think the key idea is that, they made a promise that you thought you complied with, and they're not making good on it. So regardless of who it is, first of all, let me just say, I know this can be frustrating. And so I'm sorry you're going through this, Cynthia. I'm glad you called, though. This isn't rocket science in terms of what I'm about to tell you, but I do think the next step is for you to call and ask for a supervisor or somebody on the escalation team where perhaps they have a little bit more ability to resolve the problem if you can show that you met the promotional requirements. So you're going to want to review those terms and conditions carefully. Many bank bonuses do require entering a specific promo code, or you have to enroll with a designated link, or certainly you have to maintain a minimum balance or, keep it open for a certain period of time. You just need them to explain to you, if you didn't meet that, why? What was it that you missed? And if you believe, that was not communicated clearly, then you can make that case to the supervisor or the escalations department. Because, if they didn't honor their advertised offer, you certainly can file a written complaint with the bank, so there's a record of the dispute. And then if they don't resolve it, your next step would be to go to the CFPB, the Consumer Financial Protection Bureau, and they take those complaints seriously and are required to respond, actually. So if you just go to your search engine and type in Consumer Financial Protection Bureau, that really is the purpose of that government entity, is to protect consumers, specifically in the area of financial accounts and financial products. So I would say that's probably your next process. I wouldn't close the account until you've exhausted the appeal process, because keeping it open is perhaps one of the promotion's requirements. Does that make sense?
It all makes sense, and I want you to know that I did everything that you just mentioned. I called in, I got it escalated and escalated and escalated, and it seems as though they're all coming back with the same excuse that I needed to, and they apologize that they can't do anything about it. Well, what I'm thinking is, why can't you do anything about it? You still have my money sitting on deposit there, and it's been there for the required amount of time. And you just, even if, let's say I did miss a step, I followed your instructions according to your invitation to me to open this account, and I did that. I moved my money from where it was making money and brought it here to lose my money. So I think the Consumer Financial Protection Bureau, that would be my next step.
I think it is, and they do take those seriously, and they are required to respond, and perhaps that would get their attention. In the future, I would save screenshots of the offer and the confirmation page, because those records can make all the difference if there's ever a dispute over whether you qualified. So let's make this a learning opportunity that we can all benefit from, Cynthia. But I appreciate you checking with us. Hopefully this will be resolved successfully. Thanks for being on the program today. Folks, that's going to do it for us. Big thanks to my team today, Josh, Tahira, Taylor, Omar, everybody here at Faith Fi. Faith and Finance Live is a partnership between Moody Radio and Faith Fi. Come back and join us tomorrow. We'll see you then. Bye-bye.